Was good, y'all? It's Joel, and I'm coming at y'all with another video. I'm finally back. Yes, it's been so long since I dropped the SPX and the NASDAQ videos showing you guys how to trade those pairs. But now I've been wanting to really do a series of NAS where I'm just essentially doing daily recaps of all the different trading days, essentially just documenting my trading journey across the many months and years moving forward. Um, just because I want to continue growing as a trader. I am an aspiring trader, and I do expect to get funded very soon. Just because the information that I've learned and what I've been, you know, seeing in these markets just repeat day after day, week after week. Like I just feel like now I'm at the point where it is honestly inevitable um, to get funded and to continue growing and just crush the game as a trader. So still, this is still I would consider like the early stages um, of the journey, but I'm just super excited to just be documenting this journey because I'm at the charts virtually every single day. I know the days when to trade, when not to trade. And honestly, I just wanted the series to go on for however long it needs to, just because I want to keep documenting my journey, my day-to-day journey as a trader. And I'm just hoping that the information that I have here and these videos like really help other people who's looking to really pursue trading, whether it's to, make a few extra dollars every week or like, at the end of the month, or if it's to, pursue this as a full-time career. So I know the power that trading has and or can have in the lives of people, and so I just wanted to share this with you guys. So jumping right in, well, given that today is August the 8th, um, and I usually trade using like 1 to 3 minute time frames. Pretty much I can only go back like a month. So I rewinded all the way back to July 3rd. So this is gonna be the date that I'm starting with, and then I'll be dropping a bunch of videos like, you know, moving forward in time until we get to like the live date, which is August. Even though I don't trade the entire month of August, I'm still want to do like review videos just to explain why I don't trade the entire month of August, and then I'll be returning with like actual trading in September. Um, so yeah, I just wanted these daily videos to just go through the market, just go through what I see, and hopefully this information could help someone else who's learning how to day trade. Because there, this is like learning a whole new language, and I know not everyone, you know, has money to purchase courses or that they want to really get uh, a good idea as far as like what trading actually looks like day to day. And so I want to be that person to assist with that, right? So starting off, I'm beginning with Monday, July 3rd, and I also have Forex Factory here. I can eventually do a separate video how to set up a Forex Factory, just because this is my best friend. This economic calendar literally tells me which days I'm trading versus the days that I'm not. Might because there's certain days where there's like heavy manipulation, or I just know that there's going to be consolidation, and there's no point in me trying to force a trade that I know isn't really going to be there, right? So just based off this calendar alone, if I were trading this week, I would only trade on Monday. And the reason for it is because Tuesday, July 4th, right, is a bank holiday. I don't trade bank holidays. On the 5th is FOMC meeting minutes. This isn't like a full-blown FOMC event, but like at least on these days where there's just FOMC minutes, I don't trade just because the morning is usually a lot of consolidation until like the 2 o'clock hour when this kicks in, where there's like manipulation. So it's no point in me getting in the trade. And then Thursday and Friday is NFP. So because this is NFP week, I know that usually on NFP weeks I may only trade like Monday and Tuesday, if that. Um, but usually on the days where I see the ADP non-farm employment change, when I see this event, I just know that like I'm not trading from that day onward. So realistically, it's only one trade on Monday, July 3rd. And the only reason why I didn't trade on this day is because I was out of town for a week. I was in Seattle. So I didn't have the opportunity to be behind a computer and trade, which is fine. Um, so we'll just review this day. So normally I would just trade July 3rd, and then the rest of the week I wouldn't even like go behind my computer. I would just wait till the next week. But I can also go through each of the individual days, um, just so you guys can see my strategy play out or see the logic and the explanation that I have for like why I just don't trade on those days. But the purpose of these daily videos is to just show you how there's things that happen in the market that repeat over and over and over, and that understanding pattern recognition is what will help someone become a profitable trader. If you're struggling, if you're still learning, right? These videos, being able to see it unfold every single day, it will then help you prepare yourself for when you're able to do this on your own. So the way my strategy is, I essentially uh begin at 8:30. So this candle right here, well, first off, I only trade NASDAQ. Like I was jumping between NASDAQ and SPX, but I'm really only trading the NAS100 pair. And the beautiful part about this pair is that this pair is actually like the NASDAQ pair from the stock market. So, oh shoot, dang, now I gotta go back. Sorry, technical difficulties. We'll go back to Monday, July 3rd right here. Yep. So, yep. Sorry. So NASDAQ is actually also an aggregate. This is essentially like trading stocks because NASDAQ is an aggregate of stocks, right? So we're effectively trading stocks. So the amazing part about me going through this pair and teaching this pair is that you will also have the opportunity, if you do trade stocks, that you can just use the NQU pair, and the charts are virtually identical. So whether you want to use a forex broker like me, or if you want to, use a stockbroker, like the choice is yours. But um, this is the pair that I like to trade, that I'm comfortable with trading, because I see the same scenarios playing out often. So what I like to do, the way I view the market, is that I view the market based on orders, right? Trying to find where the orders are, because I do believe the market is 100% rigged, that there's nothing that ever happens in the market by accident. And the simple logic to that is that my belief, the market was created in order for the people behind the market, like the big banks, right? For them to make money. It wasn't for us to make money and quit our jobs and just, you know what I'm saying? Like it was just for them to be able to have another revenue stream, right? So they're also in this business to make money, and in order for them to make money, right, with the game of trading, um, when someone buys, someone needs to be on the other end selling. Like there has to be an exchange, right, of buying and selling. Um, and so if I buy, it's because there's a selling counterpart order that's been placed, and vice versa. So the market is all about creating orders. So then, essentially the banks can capitalize on that, right? Because they're the ones that control the market, that move the market. It's not like you and I, the average person, that like makes the market move, right? Everything's manipulated. Everything, like with so much money being passed to the market, there's no way that it's not manipulated, right? Like there's no way they're gonna allow free flowing money to just like pass through everyone's hands. Like that's not, I don't believe that to be the case. And it's like if you don't believe that theory, and I'm calling it theory because I want you to really investigate that for yourself, but you begin to start seeing it for yourself as I go through like each of these individual days. You'll begin to see how it repeats over and over and over. A lot of, you know, the phenomena of creating orders and like activating the orders, and it's just a game of liquidity. I believe trading is just a game of liquidity. So we'll just jump right in. So what I like to do first, beginning at 8:30. So this candle here, oh sorry, before we begin, you want to set your time to New York time, UTC-4 New York, just so we can be aligned with the same time, because all these instances happen on New York time. So I have my trading view set to New York. So here, this candle right here, and I like to start on the 15-minute time frame to mark the liquidity pools. This candle right here at the very bottom, you see that it says 8:15 a.m. So this candle is from 8:15 to 8:30. So 8:30 is usually when the quote unquote stop hunts happen, right? Where the market begins seeking out liquidity, right? To start activating orders. So beginning at 8:30, I like to mark the obvious liquidity pools, and I'll color code them as well. Um, I like to find the most obvious swing high or swing low from beginning from the latest point in the market, right? So let's start with the swing high. So from 8:30 looking left, I like to find it the swing highs or the swing lows from the London session, like where you see this green shaded space and looking backwards, right? So the first swing high from in the green shaded area looking left is right here, right? This little candle right here. Reason why this is the most obvious swing high is because the candle to the left and the candle to the right are both shorter than this candle, right? I'll just zoom in so you can see that, right? So you see this candle right here, uh, paintbrush tool. All right, so you see right here, this candle. Whoa. Okay, I'll just zoom out then. All right, but anyways, this candle here, you can clearly see, take this line off, that this candle here is higher than this candle to the left and higher than this candle to the right. And the interesting part is that it also makes an equal highs with this other bearish black candle here. So technically, because it's an equal high, you can also uh, put the ray. I like to mark them with the ray. You could do on the left candle here, it made equal highs. Some people like retail, they see that as quote unquote resistance, right? So we can expect a lot of the market orders to be there. And if you want to have a better view, right? If I drop to the 1 minute, you see that these are perfect equal highs. So retail traders see this as resistance. But for us, we see that as orders in the market. We see that as liquidity, right? So that gets marked as buy side liquidity. Now, as for sell side liquidity, now we search for the most obvious swing low beginning from this point. So you see that the 8:30 candle, the 8:15 to 8:30 candle, it made it to this low right here. Now we want to see the most obvious swing low that's lower than this level because we want to mark the liquidity pools before the 8:30 mark. So the most obvious swing low is right here, right? So if I mark it with array, you see that this red line is under. Like this is a swing low because the candle to the left and the candle to the right are higher. It makes sort of a U. Sorry, I have the magnet on, but it makes essentially a U. So that is the swing low and that is our sell side liquidity. So you can see here, beginning at 8:30, it was not tapped into. So these are, and it essentially almost made a double bottom or equal lows. So this is essentially inviting sell side liquidity to enter the market. So at this point, we have our liquidity pools marked. So now what we want to do is, as we zoom in on the 1 minute time frame, we want to see liquidity get taken. You can either stay on the 15 minute or like 5 minute or 1 minute. It really doesn't matter. It's just beginning at 8:30. That's where the hunt begins. So we want to see ideally price attack one of these liquidity pools. Now it doesn't have to get it between 8:30 and 9:30 because 9:30 is, remember, this is essentially a stock that we're trading, the NAS or the NQ. 9:30 is also a very important time because that's when the stock market opens. That's when you can expect a lot of volume and volatility to enter the market. But it's possible for price to purge any of the liquidity pools between 8:30 and 9:30. If it doesn't, it really doesn't matter. We want to see another push at 9:30, but we just mark the liquidity to see. So now I'll just let it play out. Um, right. So now it's 9:15, and then this is the candle that hit 9:30. So as you can see right now, neither of the blue or red lines for the liquidity pools were tapped into, which no big deal, right? Now this candle right here, this last candle is the 9:30 candle. Well, yeah, the 9:29 to 9:30. This black candle is the first candle after the 9:30 stock market open. So now, once again, at this point, we want to see a liquidity pool get attacked. So I'll just keep skipping candle by candle, right, until we see something. So now it's just a waiting game, right? That's what trading is. Trading, you just gotta be super patient. You just gotta wait, and then we're just waiting. Right, it's getting close to the buy side. Boom. Right, so we can clearly see that price tapped into buy side liquidity. Normally, I like to see a bigger push, right? Like I don't like to see a small little like love tap. Like I want to see it aggressively attack the liquidity, um, just so we know like price is activating a lot of the orders. And um, with this strategy, right, as we're pushing up and we're attacking the liquidity, we want to eventually see a break of structure and then price leave a fair value gap or an imbalance to then take that as an entry to sell it. So most traders, as they see price going higher and pushing up, they're thinking, oh, price is going to continue going higher. Let's buy, buy, buy. But once I see price attacking buy side liquidity and going higher, my first instinct is to wait for a break of structure to sell. So I'm automatically thinking sell. So that's like the big paradigm shift for me. It's like I'm already thinking sell at this position. So now, because price tapped into the buy side liquidity, at this point, my first thought process is to locate the last swing low, because remember, we want to see a break of structure lower. So the last swing low, um, oh, I have to fast forward one more candle. Okay, so the last swing low, for when price attacked the liquidity pool is this candle right here, right under this candle. I'll just highlight this like maybe purple, something. The reason why this is a swing low is because once price attacked the buy side liquidity, we want to eventually see a break of structure. So we want to start highlighting the last swing low. As you can see, this long wick here, the candle to the left and the candle to the right of it are both higher. So this is the last low. And so now we'll continue to, go one candle at a time to see if price breaks this low or if price continues higher. If price continues higher and breaks this high, and it delivers us another low, then we'll continue moving the low, like the light bulb higher, which is going to be our signal for a break of structure. So right here, we see that this high was taken by this candle here. So where is the last swing low? Right here, right? The candle to the left and the candle to the right are both higher than this candle. So this is now our last um, point of structure. So we would like to see a break. If price comes down and breaks the structure, we would like to see it break this level here. So now if I keep going, right, this is what we want to see. We want to see an aggressive candle that's selling, and the reason for that is because remember, we believe that the market is pushing up here to activate to purge the buy side liquidity. So it's generating a lot of buy side orders, which is the perfect counter for the market to sell. So it wants to generate a lot of buy orders so that the market can put in sell orders and push price down towards the other liquidity pool, right? So at this point, this is already a great sign. We're seeing aggressive selling pressure. Um, we want to see the movements like this, and we want to see candles leave a massive gap where there's no wicks, there's nothing, you just see bodies, right? We want it to be a candle that's large where like you literally can't miss it, right? So this is an obvious fair value gap right here. However, we still want to see price. In a perfect world, we would love to see the gap stay like open like this, but we also want to see price break this level. Otherwise, we're not taking a trade, right? We need for it to break structure and leave a gap in order for us to take a trade. So with this next candle, boom. Now we see the obvious gap here and obviously a big candle here. But now one of these super crucial parts about the strategy, and I'll highlight it for you guys, is that you want to see a fair value gap be left within the displacement high and the displacement low. So what I mean by that is the last structure point, right? Like the high and the low of the last structure point before the break of structure. So essentially we're looking at this, right? Like this is our range that we're working with. And we want to see a fair value gap form within this last structure point, within this last range of the displacement high up here and the displacement low down here. So if I extend it out, do we see an obvious fair value gap within the range? And of course the answer is yes, because we have this gap here. I'll shade that gray, right? So you're seeing the fair value gap, the gray box within the pink box, within the pink displacement range. So this lets us know like this fits all of our confirmations for taking a fair value gap, and so this would be our trade entry, right? We're only taking it within this shaded box. Now, nothing to note is usually with this strategy, I like to use a 3 minute, 2 minute, and 1 minute time frame. But in a case like this where it's obvious that there's a massive gap on the 1 minute time frame, there's really no reason for me to like go to the 2 minute or the 3 minute, right? Like this essentially works fine. So what I do now is I like to use horizontal rays, usually like pink, to mark where my entry would be. It would be at 15,226 and where my stop loss is at. And there's some people that like to put their stop loss at the top of the candle where the fair value gap forms. I like to just put it at the very top because I want my stop loss to be in a safe place. Just because I don't need to take like super aggressive entries. Like I'm perfectly fine with taking like having my stop loss at a safer place, even if it means a slightly worse like risk to reward. But even then, like these trades deliver great risk rewards, and I usually take the trades if they're like at least a 2 to 1 RR. So this essentially would be the entry that I would take. So I would take a sell, of course, because now price delivered a break of structure. I can like highlight this red, right, to know that we broke structure to the downside. So then now we can take a short. So I'll put the, entry right here at the fair value gap, stop loss at the top, and then our final take profit would be at the opposing liquidity pool, just because we expect that to be a target that price wants to reach to. Um, that's pretty much the trade. What I like to do is, you know, I like to, in a case like this, I will have a limit order set. I prefer to have limit orders so I can, you know, be more precise when it comes to trading. And so once I have my limit order set, I just have to just sit here and watch price. I have the limit order set until 11 a.m. So my trading time is from 9:30 to 11 every single day. Just because 9:30 is the beginning of the stock market open, and that's where we want to see a liquidity grab. And if price doesn't deliver an entry or nothing happens by 11 o'clock, then I just delete the limit order and call it a day. So we have the limit order set, and now we just watch price. Boom, right? So at this candle right here, 957 candle, 958, it activates our limit order. So we're now in the trade. So now at this point, what I like to do is this is the last low that was made before our entry. So this is the level that I like to see price break. I don't want to see price just wick this level. I want to see price actually close under this wick. Once price closes under the wick is when I'll move my stop loss to break even. So I'll have this trade, running as is. If you want, you could slowly start reducing your risk by like if price makes highs and continues going lower, you can sort of like begin um, closing your stop loss, like shrinking your stop loss, so you're actually reducing your risk, which is great, right? You wanna approach trading um, thinking about risk because that's what will allow you to be a successful trader, right? The more you minimize your risk, the higher the probability is for you to succeed in this industry, right? So but that's my strategy. I just like to have price push down and close under this level and then move my stop loss to break even. You can also take partials along the way. Like for example, if I were to take partials, right, you want to look for partials either at lows or at fair value gaps, right? So in this case, right, this is a gap in the market. Now, of course, like the wick came in and tapped it. Um, but you want to look for gaps, you want to look for lows. So for targets, if you wanted to take partials, right, these are like the purple lines can represent partials, right? You see a low here, and then obviously the last target is the red line. So these are two different areas where you can take partials if you wanted to. I highly recommend taking partials. So now, if we let price play out, right? It got close, but did it tap our stop loss? No, because our stop loss up here, price came to this level, so we'd still be in the trade, even with spread, because spread really isn't that much. It's probably just like 1 pip. So price continues, just hovering, consolidating a little bit. Still a wick, right? So it's still wicking, so I would still be in this position normally. Just waiting for price to actually close. So, okay. So at the end of this candle, once this candle close, is when I would pretty much move my stop loss to break even. And so I would have my position protected at this point for a 1 to 2.33 risk reward, right? And then we let the rest of the trade play out. So at this point, because I protected my position, if you were taking partials, you can put like alerts so that your computer will make a noise or your phone will get notified, and then you could take partials. At this point, once my position is protected, I have obviously my take profit in place. I don't really have to like pay attention to the charts no more. I can just let it rock. So as you can see, price comes up a little bit, but it's still a few pips away from break even. So it wouldn't have knocked me out at break even, and then price, pretty much just melts and then hits a take profit. So that would be the trade. Um, Once again, it's a 1 to 2.33 risk to reward. So if you risk 1%, you'd walk away with 2.33. If you risk 2%, you pretty much walk away with like 4.5% gain. Um, yep, and that's pretty much the setup right there. So July 3rd, we would only take just one trade, and that would be our trade. I only trade the morning session from 9:30 to 11. So that is pretty much the trade recap for July 3rd. One thing I've been learning about trading that's made me a better trader is just being okay with enough, right? Being okay with just taking one trade a day. So, there's weeks where I don't take trades. There's weeks where I may only take one setup or maybe two setups in a week. And let's just say for today, if like I took this trade and and it led to a loss, that's okay because if the market delivers me another entry, then I'll take another trade, but at half risk. So in case that trade loses, like, I'll still be fine. Like it wouldn't be the end of the world. Um, but you know, I've matured as a trader. Now I understand like that all I really need is like one setup. Like I'm pretty much looking for like one entry and that's pretty much it. Um, it's taking my trading to a whole new level because now I'm more at peace. There's no revenge trading. Is like, like my psychology is where it needs to be. So this would have been pretty standard setup, but this would have been the only trade that I would have taken for the week. So for this week I would have been pretty much just 1-0. Due to the rest of the news, like I wouldn't be trading any of this stuff. So if you enjoyed this video, please leave a like. Definitely subscribe for more content. Turn on post notifications, um, so you can be notified whenever I drop a new video. Cause as you guys know, I want to be dropping these dailies, like these daily reviews, and I want to help people um inspired to be great traders. Also, another thing I want to highlight is at the top right, of course, I have my trade confirmations. It's not super specific, but I just have it there as reminders. Um, of course, like now at this point, I don't really need to like look at this because I know exactly what I'm looking for every trading day, but it's good to have, and obviously this should help you guys with if you want to trade this strategy, right? You have sort of the little cheat sheet right here. So this was the full breakdown for July 3rd. As I mentioned, I wouldn't trade for the rest of the week, but I still want to do like even super brief like recap videos of each of these days just so you guys understand and can know why I don't trade these days. So like if you decide to trade, either like S&P or SPX 500, or if you want to trade NAS, like hopefully you'll also pick up on those nuggets too, and be cautious and stay away from the market on these days too, because just because the market is open, that doesn't mean it's actually a trading day that you should capitalize on, right? So now let me just play a little bit more so you can just see like the rest of the candles that form. um so yeah, pretty much after it, you know after price came and tapped into liquidity, you see that price kind of like was just consolidating. So the market just pretty much did what it had to do, took out activated orders on both sides, took out traders on both sides, and it's just with trading, you just got to be patient. You want to let the market show its hand, and you wanted to do what it needs to do, and then you jump in, right? Like after the orders get activated and traders get knocked out, that's when if the market delivers your confirmation, that's when you look to enter because you want to be able to ride the wave down with the market and not trade against the market. You're not going to succeed trading against the market. So that's that. um so yeah, if you found this helpful, once again, I would appreciate if you leave a like, subscribe, share this with any of your friends, right? Definitely want to grow this channel up and really help other people who are looking to be aspiring traders who may have been struggling or like, you know what I'm saying, just want to find a strategy that works for them. So I'm an intraday trader. I pretty much just trade NAS and I'm, been following NAS for weeks, months at this point. And this strategy here, this literally repeats. Like this happens so often, even if the market doesn't deliver an entry, this phenomena of like the market purging one side of liquidity before attacking the other, this happens so often. So I'm certain that if you, really follow this and backtest and put effort on your end, you'll be able to train your eye and train yourself to be able to spot these setups. And then hopefully in the near future, right, we'll be able to take like the same exact trades, right, and have like super similar results. Because the goal is to get funded. The goal is to be able to, you know, like kill it in the market so then we can take care of ourselves and our families. So this is a skill set that once you learn, it's like riding a bike. Once you learn it, no matter if you put it down for some time, whether it's like a few months, years, right, you can like pick back up like nothing ever happened. And it's super important to remember that with trading, like this is a lifelong skill set. You have this and you have this for the rest of your life, right? And this is something that you can also teach your family members, you can teach like friends, like, just whoever, right? Because this is such a powerful skill set. Like, this will allow you to be able to compound money and be able to create wealth over time. So, don't sleep on the ability to learn how to trade. So, once again, thank you so much, everyone, for watching this video. I hope you found it helpful. And just know that the next video I'm going to be dropping soon. I'm going to be putting out a lot of content for you guys. So, just stay tuned. All right. So, thank you so much. It's Joel. I'm out.